In today's energy markets, let's take a look at WTI crude futures as they're experiencing some selling pressure today. Crude futures coming off a couple days of higher price action to trade lower today and currently down just under 1%, right around the 78.5 level. Now, we did see a low right around 78.30 coming off those lows intraday right before the close, but nonetheless still giving up some ground and moving back down towards the recent lows, which also correspond with basically 2-month lows. And driving factors today, one of the primary drivers was the data release this morning. Consumer confidence data coming out much lower than anticipated, consumer sentiment data, as it's phrased, and that coming in much lower than anticipated, with the inflation sentiment from the consumer coming in much higher than anticipated, and that really created some selling pressure in the space. We saw yields kick higher in the treasury markets, and we did see some selling pressure in the equity markets as well as the energy quadrant. So we're looking at WTI futures now moving back down towards those lows that we did see about a week and a half ago, which also correspond with basically 2-month lows. And also, when you look at the rig counts that were released today, the Baker Hughes rig count came out here today, midday, and a decline of 3 active oil rigs. So rigs coming offline once again this week. And oil rigs coming down 3, but gasoline rigs actually ticking up by 1. But again, rigs continue to come offline as prices are dropping, and the concern is that the consumer moving forward might not be as impactful in the demand quotient of the supply-demand dynamic, with consumer confidence and consumer sentiment declining more than anticipated.